What did you guys upgrade this?
We just upgraded yesterday because of the positive surprise from the fourth-quarter GDP.
Okay, and the previous one was?
The previous one was 5.3%, so mostly the revision reflected the carryover effects from last year.
Okay, 5.8. How much is consumption right now within 5.8?
Yeah, I think a big part of it will be coming from the household consumption because now we have the shift of the zero-COVID policy, so the households still have a lot of abundant savings on the balance sheets, and we will have some labor market recovery, especially in the consumer services sector side. So all of these will be supportive of a pretty strong recovery in the consumption this year.
The savings rate is high because they didn't spend on goods, or is that because they didn't spend on houses? Or mostly houses or not so much goods?
So actually there are a couple of factors driving the very large excess household savings, and we estimate that is as high as over 10% of GDP sitting on the household balance sheet. So I think maybe around half of that is driven by that the households have not been able to spend all of these money over the last 3 years because of the COVID policy. But actually around half of it could be driven by that the property slowed down last year. So all of this money which could have gone to the housing market are now sitting on the household balance sheets, and some of that is also reflecting in the fact that the wealth management product growth has been pretty slow since mid-2021.
Yeah, that's right. Okay, let's look at high-frequency data, things like mobility and congestion. I know you guys track some of the data there. What are they telling you about January?
So basically, everything is improving very quickly since the end of December. And for example, if you look at the amount of people traveling ahead of Chinese New Year holiday, now it's already up around 60 to 70% year on year, which is pretty impressive. So this is why we are confident that the China economy will be able to have a pretty strong recovery, probably starting in February.
Okay, and how do I play this in the markets? 10-year yield, for example, 2.9, 2.91%. Is there more upside, you think, in yields?
Yeah, so for year-end forecast for the CGB 10-year, it is 3.1%. So there's still a lot to play, a lot to catch up in the CGB yield. And however, we think that in the CNY market, probably a lot of the positive optimism has been reflected in the CNY FX. So probably not much space for that. And also, actually, our house view has a rather optimistic oil price forecast of $100 per barrel. So we think that the oil market may have overlooked the reopening factor of the Chinese economy. And also for upstream materials, I think, well, of course, we are not talking about that China is going to be having a very strong construction boom like what they had in 2016, for example. But the reopening, which will benefit the service sector, will also help them to increase oil consumption, the natural gas consumption, and also the upstream minerals. If the property sector is going to stabilize this year, we'll also benefit from it as well.
Is there a tail risk that it recovers well enough that inflation becomes a problem? That's the other question that many people have, that it creates inflation problems in many parts of the world.
Sure. I think, first of all, speaking for China itself, a lot of the downside in the CPI is really driven by the service sector and housing sector. So, of course, I think now that China is reopening, it's reasonable to expect that some of the consumption services prices will be picking up. And actually, you've already seen it in the airfare prices, in the hotel prices in Hainan, like last December, for example. But I think the property sector, we are just looking for L-shaped recovery because we know that the structural demand is not going to be rising very quickly. For example, you learned that the population just declined in 2022 from the national statistics yesterday. So I think the property prices probably may be just stabilizing this year, so that will be able to keep the CPI in check in China. And I think globally speaking, a lot of central banks right now, the headline, of course, the inflation are now coming down. So a lot of central banks are really focusing on the core inflation, of which they pay attention to the labor market developments. So on that, we think probably the oil price upside may be slightly inflationary, but I think ultimately the central banks are still going to focus on the labor market developments that determine the core CPI trajectory.